All right, ladies and gentlemen, welcome back to the channel. We're going to get into some key things with AMC stock that you need to know. Obviously, give you a run through of the data, kind of what happened on Friday. I don't know if you want to call it rumors or what about this settlement review, but we'll discuss it as well here in this video. Now, on top of that, I want to go over this article that says short squeeze looms for AMC as stock borrowing rates soar. And this is another article on the same premise that AMC is about to go through a short squeeze. And for everyone, you should have your own hypothesis and theses and opinion on why AMC is going to do what it's going to do. But for me personally, why I think a squeeze is coming is because people are too negative heading into the court date April 27th. After all, the judge did not lift the status quo order, and it looks like there's going to be further litigation processes over April 27th. I think there's probably going to be another court date for June, and the markets are not expecting that. Shorts are not expecting to have to wait that long to see this conversion happen, and you can see that presented in the options. So let's get into it. Gave you guys a brief rundown. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys also want to trade with me live in real time, link down below in the description of this video. It's earnings season, baby, and earnings season brings lots of potential and opportunity. So let's talk about this first things first. So short squeeze looms for AMC as stock borrowing rates soar. Days after the judge denied a settlement in a shareholder lawsuit against AMC Entertainment, which would have allowed it to convert its AMC preferred equity APE units and proceed with the 10-for-1 reverse stock split, the AMC stock borrowing rates have skyrocketed, subsequently increasing the chance of a short squeeze. Instead, the borrowing cost for the stock of the American movie theater chain opened Wednesday, April 12th at almost 1,000%, according to the relevant data shared on Twitter by fiduciary and investment advisor Kevin Malone on the same day. Notably, these borrow rates are reported to be at all-time highs for AMC stock, even higher than those recorded in January 2023, according to the chart and data shared by synonymous Twitter account Unusual Whales on April 14th. And this is kind of a history of the borrow rates that you're seeing. And obviously, look, you've never been this high for such a long amount of time. I mean, you really started to base out over here. And if I were to this is around March, I want to say, of 2023. You started to bottom out around where we usually have always bottomed out. This is like 100% give or take. And then it started to increase exponentially. And you're still sitting like over here, as if I could put my cursor on it, roughly in this range, which is still at historically very elevated levels for AMC. Now, the perfect score. Meanwhile, finance analytics firm S3 Partners, which tracks data on short selling, has recently identified AMC as one of the 18 stocks with perfect squeeze scores of 100, as Barron's reported on April 13th, citing Thor Duansky, S3 managing director of predictive analytics. According to Duansky, the squeeze score overlays the significant components for a short squeeze: higher financing cost and unrealized losses. In this context, unrealized losses on short positions and higher financing costs make it easier to hold onto the borrowed stock, adding to the risk that traders will want to exit their bets. And here's a quote. It says, it costs about 238% annually to borrow AMC shares, according to S3. That means that a short seller who borrowed $100 of AMC stock and sold it short would have to pay the owner roughly $300 if they kept that position for a full year. So it's literally impossible. It's unsustainably impossible to remain in these short positions. That's a fact. And that's again, what I'll go back to, why I think there is going to be a short squeeze after April 27th, because I don't think this is said and done on April 27th. And when you're paying out these kind of fees, and I mean, just look at that. If you shorted $100 of AMC and you have to pay $300 for a year, every month this gets delayed is a problem for shorts. And I think that would, cause a multi-100% rally in AMC stock after April 27th. Now, goes on to say, indeed, a high squeeze score indicates the possibility that a stock price will soar higher, signaling danger for short sellers who might go into a frenzy trying to close their positions and buy back the stock, driving the price up even faster. In other words, a short squeeze can create a significant amount of money in a relatively short period, but may also result in huge losses as the increased demand for shares attracts more buyers, driving the stock higher and leading to more short sellers trying to cover their positions. As things stand, the AMC stock is currently changing hands at a price of $5.46 per share, up 2.25% on the day. And this is what is wild. This article was written yesterday, right? On Friday, in the beginning of the day. Let's see when this was posted. Does not look like there is an exact time, but it was April 14th, 2023. So it was yesterday, I believe in the beginning of the day, because AMC was up 2.25% in the beginning of the day when this article was written. Now, what happened to AMC throughout the day? Well, you really got some rumors going on, and I have to call them rumors because I cannot confirm nor deny what caused this drop. And it was this. AMC dips 6%, 8 leaps 5% as conversion settlement gets fresh review request. Now, apparently, on Friday, attorneys for the parties to the settlement, which is the Allegheny County Pension Fund and the other small firms, wrote the Delaware Vice Chancellor Morgan Zern to request a status conference for next week to talk about timing and notice of the settlement. So basically trying to figure out when they would receive those shares, right? When this could possibly go through. And an adjournment of litigation deadlines pending a final decision. So that's basically it. They're trying to find out the timeline of this. There's nothing else that is apparently happening. Now, this could all be totally false. I can't find anything else on this. Seeking Alpha is the only news outlet that is reporting this. And maybe it's because they just wanted to knock down AMC. Maybe it's real. Maybe this is actually a thing. Maybe they're trying to blow it out of proportion to something that it's not. Because, I mean, bottom line, nothing's going to happen until April 27th. Court date is coming on April 27th. That's it. So, really, to see AMC at one point down 9% was crazy. And even to see AMC close out the trading day down 6.23% is crazy. Makes absolutely no sense. If you take a look at after hours, things started to normalize a little bit, up 1.56%, sitting at $5.20 per share. And if we go ahead and take a look at the economic data, not economic data, we'll talk about that a little bit here in this video as well, but mainly in that next video. AMC is on the threshold securities list still, and it was weird because yesterday, or last night, I should say, I was looking at the data again, trying to make sure there's nothing I didn't miss, and it said we weren't on the threshold securities list. Now we are. Maybe it was a glitch with Ortex. We have not gotten the failure to deliver numbers, the ones for this upcoming week. But last week on Thursday, you had about 1.8 million FTDs. And then on Friday, you had about 2 million FTDs. 1,999,789. We'll round that to 2 million. So next week, considering you're on the failure to deliver list, it's probably going to be a lot higher. And I mean, not going to say naked shorting is necessarily happening, but it would make a lot of sense to sell AMC stock short in naked form, right? Because look at these cost to borrow fees. Doing things legal is expensive. If you could naked short AMC, in theory, you wouldn't have to pay that cost to borrow rate, which is killing these shorts in this trade. Now, do I necessarily think that is happening on a widespread kind of basis? No, but why are the failure to delivers, causing AMC to be on the threshold securities list again? We were just on that less than a month ago. Something to think about here, and which could be very bullish for AMC in the end, because naked shorts, they're not recorded in the live short interest on free float. So 26% of the float or more, the official report that we just got was 26.89%, almost 27% of the short interest is legal shorts. That means they are paying these borrowing fees that are in the hundreds of percent range. If you do have naked shorts, they're not paying these fees. Well, we still know the legal short interest is 27%. You add on a couple percentage points for naked shorts as well, you're over 30%. That can get very aggressive after April 27th. When a squeeze starts or an upside rally, in my personal opinion, it's coming April 27th. I'm not a financial advisor. I'm not a fortune teller. I don't know, the judge firsthand. This is all coming down to common sense. You could get a very ferocious rally. So let's continue on. Like I said, 26.01% short interest of free float, 134.28 million shares that are currently sold short. Cost to borrow average 349.09%. Cost to borrow max at 398.46%. Cost to borrow minimum sitting at 7.94%. And then Interactive Brokers short availability has about 400,000 shares that are available, with a cost to borrow rate of 246.53%. So very high numbers that you're seeing across the board. The option activity for last week was 14% positive, 595 orders totaling $174 million. On Friday, so yesterday, you've seen 166 orders totaling $28.86 million, positive order value of 24%. Now, forget any of this. I want to just keep watching how the total open interest numbers start to vary on the expiration of April 28th, because on Monday, you had 9.77% of the total open interest for this option expiration being calls. Now it's 21%. So as AMC stock has went higher, you're seeing this open interest call side go higher as well. And I think that makes sense. And I think that will likely continue to happen heading into April 28th. On the put side, about 79% of the open interest is in those puts. So there you have all of this information. Just a quick rundown as well, what happened as far as economic data last week, and specifically on Friday was the big reset or change. Really, expectations got broke in a massive way. So inflation expectations, 1 year inflation expectations, you were expecting 3.6% again. That's where we were just last month of February. It shot up to 4.6%. So typically when this happens, markets are crashing or head to new lows pretty shortly. This was the jump you've seen from September till October, and that's when the markets were at their lows in October. Well, this is the biggest jump month over month that you have seen in years. That's insane. So, one, economists just had this all wrong. But number two, if 1 year inflation expectations are this high, it's going to mean inflation is going to go higher. I mean, if you look at inflation expectations compared to actual inflation, they look pretty similar. When one spikes, the other tends to spike. So this means inflation is probably going to go higher. And inflation expectations, if this continues, would be getting unanchored. And long-term inflation expectations, 5-year inflation expectations came out as well, and they remained constant at 2.9%, which was a positive thing. But this is not going to let the Fed cut rates. It's not going to let them pivot. Yeah, sure, they might pause for a month or two, but inflation's going to remain sticky around 4%. They're going to have to continue to raise rates. They're not going to be able to cut rates. And that was the biggest story on Friday yesterday that did cause the markets to freak out quite a bit, because you were substantially positive in the beginning of the trading day. Before this data came out at 10 p.m., it was very aggressive to the upside. Data came out, Michigan consumer sentiment and the inflation expectations, and then all hell started to break loose throughout the day, and it was very volatile, very, very volatile. So I do think you can expect that volatility to come for quite a while. You also had retail sales that came out -1%. You were expecting -0.9%, so not a big shocker there. Inflation that came out Wednesday was also pretty bad. I mean, headline CPI went down to 5%. Core went up to 5.6%, and on an annualized basis hit 0.5%, which is weird because core is now higher than headline CPI. So one would say that food and energy is the whole reason why inflation has been going down. That inflation's not really going down if you factor out those things like core does. So not good news on the front of the Fed pivot, the Fed U-turn, the Fed rate cut, whatever you guys want to call it. That was not good. Now PPI, that was much better than expectations. You were expecting a 0% reading. It came in at -0.5%. So the producer side of inflation is getting a lot better. But overall, to weigh these things out, last week was a total shit show as far as the data was concerned. Now, I don't think it's going to be much better heading over the next couple of weeks, because you get earnings that start. And this whole rally was based off of multiple expansion, which means the amount people are willing to pay for stocks has gotten higher, or stocks based off of their earnings. But their earnings expectations have actually dropped about 6% over the last month. That is not a good kind of precedent heading into earnings season, guys. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys enjoy your day. It's beautiful outside, and I will see you in the next one.